This channel isn't about hype or price predictions, it's about what's really happening in crypto, the moves behind the markets, the policies shaping the future, and how they affect our freedom. If you're new here, I'm Paula, and this is where we cut through the noise. We don't just talk charts, we talk change. And if you're already part of the wolf pack, you know the mission. Stay alert, stay informed, and never stop asking who benefits when money moves. Now, let's talk about the UK's digital pound and the question that could define the next decade. Is this about progress or control? They're calling it progress. A faster, smarter, modern kind of money. But beneath the headlines about innovation and safety lies a question few dare to ask. When money becomes code, who writes the rules? Because once cash disappears, every transaction becomes a data point, and every data point tells a story about you. This isn't science fiction. It's already being built right here in the United Kingdom. The Bank of England and the Treasury are preparing the rollout of something called the digital pound. They promise convenience, but if you've been watching how power shifts in finance, you already know convenience and control often travel together. So what exactly is the digital pound? It's a central bank digital currency, a new purely digital version of the pound issued directly by the Bank of England. Not a cryptocurrency, not a stablecoin. This would be government money, coded, tracked and maintained on a centralised ledger. They say it will sit alongside cash. For now, you'd access it through approved wallets and payment apps, each connected directly to the central bank's core system. And at first glance, it sounds harmless. Digital payments are already everywhere, so what's the difference? The difference is who controls the ledger. With cash, transactions disappear once the note changes hands. With the digital pound, every movement exists forever, visible to whoever owns the system. The Bank of England says the digital pound is about modernisation, keeping up with how we already live. They argue that if people use less cash and more contactless payments, the central bank must adapt to stay relevant. They also claim it will boost financial inclusion, make payments faster, reduce fraud and encourage innovation. But between the lines is another story: competition for control. Because if people start using private stablecoins or decentralized crypto for everyday transactions, the state loses oversight of money flow. The digital pound brings that oversight back. In their own papers, they admit they could set holding limits, possibly £20,000 per person and £10 million per business, to prevent disruption to banks. That's not protection, that's a ceiling. Let's talk about that word that keeps coming up: programmable. It sounds technical, but it's simple. Code can decide how money behaves. Imagine being paid in digital pounds, but you can't use them after a certain date unless they're spent, or you're restricted from certain purchases during an energy crisis, all automatically. No permission needed because it's written into the system. The Bank of England says they wouldn't program your spending, but once the framework exists, anyone with access, governments, corporations, even algorithms could. And when that happens, freedom becomes conditional. Cash is anonymous. Digital transactions are traceable. A digital pound makes that traceability permanent. Officials insist privacy will be protected, but protected doesn't mean private. The system still records every exchange, every transfer, every pattern. Access can be justified for tax enforcement, crime prevention, policy monitoring, all reasonable causes until the definition of reasonable changes. Technology doesn't forget. It just waits for new instructions. And this isn't just about the UK. The world is moving in the same direction. In Europe, the digital euro is entering its next phase, testing wallets, setting holding limits, integrating identity frameworks. Officials promise inclusion and efficiency, but it centralises power under one institution, the European Central Bank. In the United States, the Federal Reserve is exploring the idea through pilot projects and FedNow, their real-time settlement system. Fed officials say it's about modernisation, but lawmakers are split, warning a digital dollar could mean financial surveillance on an unprecedented scale. And then there's China. The digital yuan, or ECYN, is already in use. It's programmable, trackable, and can be switched off. Stimulus payments have been issued that expire if not spent in time. That's not theory, that's today. So where does the UK fit into this race? Somewhere between Europe's ambition and America's caution, the government wants innovation without losing control. The Bank of England wants digital relevance without chaos, but both are building the same foundation. And once that infrastructure exists, it won't matter who's in power, the system will run itself. Every generation redefines money. Coins replace metal, paper replace coins, card replace paper, now code replaces all of it. Each shift promised convenience. Each shift demanded trust. When we moved away from gold to paper, we trusted banks. When we moved from cash to cards, we trusted payment networks. Now we're asked to trust software and central servers. The danger isn't the technology, it's the centralisation. Once all value flows through one controlled system, power concentrates quietly, not through elections or headlines, but through code. Picture how this could look in your daily life. Your wages arrive instantly, no delays, no fees. You buy groceries, pay bills, move money, everything works perfectly. Then one day, there's a new rule. Certain transactions are paused for security, or your funds are temporarily frozen due to a system flag. Maybe it's just an error, or maybe it's policy. When the system decides, what can you do? There's no cash to withdraw, no note to hide away, no privacy by default. You simply comply. That's not a conspiracy. That's the logical consequence of total digitisation. Across the world, central banks are competing for the same thing, relevance and control. Over 100 countries are exploring digital currencies. Each one claims to modernise money, but together they create a new kind of financial architecture, one where trust flows upward, not outward. Meanwhile, decentralised crypto was built to do the opposite, to spread trust, not concentrate it. That's why this isn't a battle between old and new money, it's a battle between centralisation and autonomy. The digital pound might not kill freedom overnight, but it will quietly redefine it. So where are we now? The Bank of England has already completed design and public consultations. A new paper is due the 10th of November 2025. Expanding on how stablecoins and digital pounds will fit together under UK law. Testing and prototypes could begin by 2026. The first real digital pound might circulate before the end of the decade. That's not a rumour, that's a timeline. And most people still have no idea it's happening. The digital pound will be sold as progress. Maybe it will make payments faster. Maybe it'll stop fraud. But the real question, the one every person should be asking, is simple. When money becomes programmable, who programs it? Because once we trade privacy for efficiency and freedom for convenience, we never get them back. The future of money is being coded right now, and how much control you keep will depend on how much attention you pay today. If this video helped you understand what's really happening, share it, not for clicks, but for awareness. And if you want to stay ahead of this shift, join the Crypto Wolfpack. We track the truth, the charts, and the changes shaping the next era of finance. Because while most follow price, we follow power. Thank you so much for watching today. I'm Paula, and I will see you on the next one.